Hello everyone. This video is intended to give you the solution and show you the process towards that solution for assignment number 1 in financial accounting. So let's get started. Question number 1 of 2 questions gives you a series of account balances. This is the chart of accounts with account balances, and it asks you to prepare a formal income statement, a statement of owner's equity, and a balance sheet for Windsor Learning Services. So let's do that, and the first thing we're going to work on is the income statement. So get used to the formal aspects of that. The income statement, the first line is the name of the company, Windsor Learning Services. Second is the name of the statement that the financial statement you're actually preparing, which in this case is the income statement. And finally, the date. Remember, the income statement is a period of time, so we have to figure out what that is. What's this? Please, before the business is entering its second month of operations, from the information given below as of July 31st, 2014. Okay, so it's for the month ending July 31st, 2014. Good. Income statement always starts with revenue, so we'll try to identify all of the different revenues that are involved in this statement. So we go down the different accounts and we get to textbook rental revenue. This is the first revenue one that we get to. So there's no particular order here that's necessary under GAAP, although often it's the larger number that's first, but that might change from year to year. So let's just go in the order that they come in. So textbook rental revenue. Was $300. We starting a new column, so we always put a dollar sign at the start of a new column, and that's the only dollar sign we'll see, except if there's a total amount, a final total, then we're going to double underline that. So textbook rental revenue was $300, and underneath that is tutoring fees earned. So we'll put that in as well. Don't forget that revenue and sales have all kinds of different words that are associated with them. You know, tutoring fees, rental, tuition, there's lots of different types of sales and revenue words. So please look for the meaning behind the words, not just the word itself. $4,200. We check the rest, and that appears to be all of the revenue accounts, so we can now total revenue. And it's not required, but it's a nice format to have a column here with the sub items, and then start another column out here with another dollar sign to have the total amounts in them, so that it makes it easier to analyze. $4,500 in total revenue. Now we move to expenses. So put a expense total, and we go down the list in order. Expenses, office rent expense is $2,500. Okay, so same column, so the dollar sign continues to do the job for us without having another one in there. It just gets too cluttery with dollar signs all over the place. Owner's contributions, no. Owner's drawings, no. Supplies inventory, no. Revenues. Tutor wage expense. Is $1,540. And utilities expense is also under this. It's good practice when you're naming accounts that you, and it is an expense account. It's a good practice to get into to add expense to the name to make it very clear that it's intended to be an expense on the income statement, like these are. 680. Okay, we add that up for total expense. Zero, 17, no, 0, sorry, 12, yeah, 12, 12, 18, and 4,820. Correction. 4,720. Always use your calculator. 4,720 in total expenses. So we now have a net income, or if it's negative, it's a net loss. It looks like it's negative. In fact, it's $220 negative. It's the bottom number, so we put a dollar sign, and we put a double underline in order to indicate that this is the end of this particular schedule. And you could put net income and then show that it's negative. I like to make it very clear so that you put here net loss and, in fact, then show that it's negative with brackets. It's not correct. It's not acceptable to put a minus sign, partly because that gets misinterpreted. Sometimes people think it's a dash or a hyphen or something. So the parenthesis is very clear. Okay? So remember the loss of 220, because we're going to need that in our next calculation, because we're going to be calculating next the statement of owner's equity. I'm going to cheat here, take a little shortcut, because the name of the company, of course, stays the same. And the statement of owner's equity is also for a period of time. The only way that the statement of owner's equity can be, or the statement of changes in owner's equity, as some textbooks talk about it, the only way that we know for sure the income period that is covering and when the beginning balance is taken is to show that it's also the month ending. The difference is that the title here is the statement of owner's equity. Statement of owner's equity always starts with the beginning equity. Okay, so here we have the beginning equity at the start of the month, and the number that we have here is Milton Windsor's capital on June 30th. So it also on July the 1st is 7,400. Okay, we're starting a column, so put a dollar sign there. We then add, so plus contributions. Okay, contributions is any extra money or value or asset actually that the owners have brought into the business from their own personal side of things. Okay, so these are considered to be contributions, and we sure enough had some owners' contributions, $1,200. Also, you subtract any drawings that the owners might have made in the business during the year. In a sole proprietorship or a partnership, this is how the cash and money is taken out of the business by the owners. It's only done by drawings. So because the income part of it, they can't claim their wage. They can't put that as an expense on the income statement. So they claim cash and in drawings, and it comes directly out of equity. So in this case, we had withdrawals of. So there's a couple of terms you can use here. Drawings is acceptable. Owners' drawings, owners' withdrawals, or just withdrawals would be just fine. And that was $1,000. And you also put in now the net income. Now in this case, the net income is a loss. So I'm going to say plus net loss. So plus a minus is 220. And the ending owner's equity is what we have left here to calculate. We end up with 7,380. 7,380. Double underline. We're at the end of this schedule or this statement, and a dollar sign at the final total also. Remember that number, 7,380. We're going to need that in a minute. Let's go to the balance sheet. All right, so Windsor Learning Service, the balance sheet is the final statement. And the balance sheet, as you remember, is a point in time, not a period in time. So we are not talking about the month of July, we're talking about the end of July. So you can say as at July 31st or on July 31st is okay as well. Okay, but that's part of that formal aspect of the three different lines in the titles of all of these different statements. Okay, let's get going on the balance sheet. Balance sheet has is assets equals liabilities and equity. So let's start with assets. In this assignment, there was no requirement for you to classify the assignment in any way. Classify the balance sheet in any way. Even though we've talked about it already in class, we're going to tighten up that requirement a little later on in future assignments. Okay, so let's check all of the assets that we're going to be dealing with here. First of all, we have cash, and cash is 1,600. starting a new column, so have a dollar sign at the top. Accounts receivable. And remember, you are to write out entirely these accounts. You don't abbreviate them, so you don't want any room for misinterpretation of what you're saying. Sometimes you have to write small to do it. Accounts receivable of $2,000. And supplies inventory is $1,280. Okay, so these are all current assets. If we were to classify the statement, this is what we would call current assets, and we would add this up to get total current assets, which again sets up the income statement for analysis that we're going to do later on. Then we have some fixed assets. The equipment is one. Equipment is $2,200, and furniture is the final one. Furniture is $1,800. Okay, that's all of the assets that we had on the accounts that we were given. So we add those up. It's $8,880. Notice there's no decimal anywhere. You never include those on the financial statements. Even if you're given them, you round it to the nearest dollar, at least. Okay, so this is the final asset in the asset column, so we double underline and we call it total assets. Now, unfortunately, I've squeezed myself for the liability, so didn't make very good use of the board space. So now on this side we're going to have liabilities and equity. Okay. If you remember the accounting equation, that's exactly what the balance sheet shows. Assets equal liabilities plus equity. So we'll start with liabilities. We have accounts payable. $1,500. Starting a new column, dollar sign at the top. Okay, accounts payable is the only liability we have. It is if we were classifying this statement, that would be a current liability, right? Because you expect to pay for the accounts payables within the next 12 months. Then we have equity. And under equity we have owner's equity that we calculated a second ago, $7,380. Now, some schools of thought, there's different ways of doing this. I'm happy with owner's equity. Some people like to call this capital, and it's owner's capital. And if you know the name of the owner, you typically put the owner's name in there. It's not a requirement under GAAP. It's just a traditional way of doing it in some schools. So you're not going to be marked wrong for doing any of the different types of methods. I know on this assignment, Mrs. Crew has indicated that you should be putting the names in there, and that's fine, but it's not going to be something, it wasn't something that you lost marks for in this assignment, and it won't be in future ones either. So, okay, so we have our all of our liabilities and equities listed here now, and we cross our fingers that this is going to add up to $8,880. So this is total liabilities plus equity. We're done. This is the first question of this assignment. I'm going to stop this video and I'm going to do a second video to talk about question number 2. Thanks, and see you in just 1 minute.